Alright, so in this video, I'm going to go over my trades for the week, my closed trades for the week. So total closed profits for the week, net profit is 1348 USD. This is after commissions. And I had about 7 trades that I closed, and I'm going to go through all of them one by one. So the first trade here, my favorite of the week, I think, was a Zoom earnings trade. It was a naked put at a 350 strike. Now this is very interesting. I learned something very important, is the importance of closing your trades, and which is something I always do. I rarely let them go to expiry, basically mostly because I'm always afraid to let it go to expiry. But this week was a good example why you should close a decent profit. And look at this. So this is a naked put on Zoom at 350 strike. I opened March 1st for March 5th expiry. I closed the next day, March 2nd, for 39 cents. Let's go look at the chart of Zoom so you understand the importance of closing your trade early. So look at this. March 1st, Zoom closed at around 4:12. Actually 4 o'clock, you could see was, or 3:45 was trading at around 4:10. I sold a naked put at a 350 strike. So 60 points away, 60 points lower than the current market price. I sold a naked put for $3.20, which with March 5th expiry, I did one contract. The next day, or actually even after hours, Zoom was trading at 455. So it looked like a complete winner because Zoom was at 410 at the close, and after hours, after earnings was announced, it was trading at 455. So that means it's a complete winner. And then at the open, it opened around 450, but then it started dropping slowly, 430, 427. You can see right here, 415. I got distracted. I forgot to put an order. I was going to put an order for 10 cents because I saw it trading at around 450 pre-market. So I knew that this put option of $3.20 is going to be worth very little. So I was going to put an order at 10 cents. I forgot. And then when the market opened, I saw that 10 cents, or actually 5 cents, was the low of the day. And it opened at 10 cents. So my order of 10 cents would have gotten filled, but I didn't place it. And then I saw the option kept gaining value, 20 cents, 30 cents, 40 cents. So I didn't want to wait until it comes back down because who knows. So I decided to just close it for whatever it was trading for. And that was 39 cents. So I closed it for 39 cents. That gave me a net profit of around $270 US. And I'm really glad I did because look at my strike is 350. Look what happened to Zoom that same day. It kept dropping and dropping and dropping all the way to 370. And then the next day on Wednesday, well, if you've been watching the market, you know exactly what happened. It just kept dropping and dropping, went below my 350 strike. I was even thinking of reopening the trade, but I could have probably made maybe an extra $1 or $2 if I reopened the trade. But I didn't feel like taking the risk because, as you can see, it just kept dropping. And then it went as low as 318, even lower. But it closed the week at 337. So if I had kept this until Friday, so if I had kept this 350 put until March 5th expiry, which is Friday, which closed at 337, my 350 put that I sold for $3.20 would be worth $13. So I would have lost about $1,000 on this trade if I had kept it till expiry. So it's a good thing I closed the trade when I had a good chance, because basically there's no point holding on to the trade for 40 cents, even though you think you're far away, but it's not worth holding the trade for 4 days just to make an extra 40 cents plus commissions. So I made easily maybe 70% of the profit or 80% of the profit. Why wait an extra 4 days just to make the remaining 20%? Or even better, would you even enter the trade just for 40 cents? If you were not in this trade, would you have placed the trade just to collect 40 cents? Probably not. So that's why I closed the trade. Now, the buying power for this trade here, Zoom has a 30% margin requirement. And the stock was trading at around 410. And I sold the 350 strike. So when I placed this trade, the buying power for this trade was 6,300. But I knew it was going to be a quick trade. I wasn't going to hold for long, and I was able to get out the next morning. So it was not even 30-minute hold using $6,300 of capital, or maintenance excess in this case. All right, the next trade that I closed was CCIV. I opened it February 24th. So let's look up CCIV on the chart here. So CCIV was trading February 24th. Is it on the chart? No, I'll have to go 1 month. So yeah, so February 24th is around here. CCIV was trading at around $29. I placed a covered call trade at a 25 strike. I paid $21 to get in. So basically the call premium was so rich that it allowed me to sell a covered call at a strike that is lower than the current market price. The market price was 29. I sold a covered call at 25. And because I probably collected $8 from the call premium, it made my net debit to enter the trade $21. This had an April 16 expiry, but I got out March 1st. So where's March 1st? So March 1st is around here, Monday when everything was green. It was a green day, Monday. I got out for $22.12. So a net $100 USD profit. So that was CCIV. And then I think CCIV, I think it dropped to 21 on Friday, but now on Friday it closed at 24. Next trade I have here is Palantir, February 25th. So let's look it up on the chart first. So PLTR, February 25th is over here. So when Palantir dropped below $24, I did a covered call at a 20 strike. So I went even lower for April 16 expiry. I paid $18 for this trade. So the call premiums that I sold allowed me to pay only $18 at a strike of $20. So that means my max profit is $2 if Palantir stays above $20 by April 16. But of course, as the stock moves up, I can get out of the trade before, which is the intention. So when did I close the trade? So I closed the trade March 1st. So March 1st, Palantir went up a little bit. I was able to close the trade for $19. So I got in for 18, got out for 19. So that gives me an $88 net profit. All right, so Rocket, this was an old trade that I had. It was an old covered call in my RRSP. As you can see, it was open November. So it was open a long time ago, but I finally closed it this week. I closed it March 2nd. It had a March 19 expiry. So the reason I'm including it for this week is because it was closed this week. But it isn't necessarily the profit that I made this week for just this trade, because this is the result of rolling the call option several months and then finally closing it this week because Rocket flew to the I think 40s or 50s. So I was able to close the trade earlier than the March 19 expiry. And then when it dropped, it actually dropped back down to 25. So I could actually get back into the trade if I want. So I got in November 13. Where's November 13? It's around here. So stock's trading at around 21.85. So I bought 100 shares of the stock and I sold call options at the money. And I kept doing that every month. And I collected enough premiums to make my cost basis $16.19. So my cost basis was $16.19 from selling call premiums on Rocket. And then this week I was able to close the entire trade for $21.95. So that gave me a $564 net profit on Rocket. So that's why I said this isn't a profit that I would make per week. This is the result of several months of rolling the call option on Rocket, but I closed it this week, so I'm including it this week. And look at this crazy spike here, 41.60. So what's the return on capital for this one? Actually, let's calculate just for fun. 21.95 over 16.19. So 21.95 divided by 16.19. So that's a 35% return from November to March. So December, January, February, March. So 4 months. So not bad, 35% in 4 months, which is the reason why I like covered calls, because you can definitely make a better return than dividends. But the problem is you always have to look for the stocks that would give you that opportunity. Plus, there's always a risk that the stock that you're using drops 20 or 30%, like in some of my examples here, which I'll get to later. All right, next on the list is Fubo. February 17. So this is an old trade that I had that I actually was supposed to close, but accidentally did not close it. And a good thing I didn't close it because I ended up making a better profit. So February 17, where's February 17? So this, I need 1 month at least. February 17 is around, it's not even a good entry actually. So Fubo was trading at around $43. I sold a naked put on Fubo at 35 strike, collected $4. I actually had two of them. So I tried to close it for $3 and I accidentally just put an order to close one contract. So one of them closed and I was left with this one here that I wasn't able to close for $3. But then for some reason, the stock jumped before earnings. It had earnings this week. So you could probably see it right here. So it jumped March 2nd for some reason before earnings was even announced. And I was able to close the trade or the put option, I was able to close it for $2.07. So that gave me a better profit because if I had closed it for $3, it would have been a $100 profit. But this way it was a $181 net profit. But then Fubo dropped after earnings all the way down to 35. And then on Friday, all the way down to 26. And I think on Thursday, I re-entered Fubo. So I actually re-entered Fubo. Should see it somewhere around here, but it's not a closed trade. I still have it. So I re-entered Fubo at a 22.5 strike. So look at my initial strike was 35, but this trade I closed it for a profit. And then when Fubo dropped even harder, I got back in at a 22.5 strike for $1.56. But this put option that I sold for $1.56, it was actually worth $3 that same day. So it wasn't a good entry either. For this trade. But what can you do? You can't perfectly time it. So that was the Fubo trade. Next, I had a covered call on Open. So if we look at Open, I don't think this was a good entry, but at least I was able to get out for a profit. So this was open February 22nd. So where's February 22nd? So February 22nd is around here. Open was trading at around $30. I got in. I did a covered call at an April 16 expiry. I paid $25 to get it. I paid $25 to get into the trade. And then I closed the trade this week, March 2nd. So March 2nd is around here. So basically it's time went by and the stock went up just a little bit. So I was able to close the trade for $26.10. So it's not much. My max profit was $5 for April 16. But I was able to close it for $1.10 profit here. So after commissions, it was around $100 net profit. And actually, a good thing I did because look what happened to Open Door. It dropped, I think, over 20% on Friday. It went all the way down to $17. So from $30 to $17. And so yeah, I tried to get back into the trade, but my order didn't fill. I was a bit picky on the price, on the entry. My order didn't fill, but after seeing the stock drop 20%, I definitely wanted to get in again. I don't know if I still have something open on it. Yeah, I already have a covered call on Open actually. So I've got another covered call at $20.80. So this one's not doing too good, but at least my cost is $20.80. The stock is trading at 22, but at some point it was trading at 17, and my expiry is May 21st. So this one's a bit further. So this is not a good entry either. But yeah, so in terms of closed trade, this trade I closed for $99 net profit. And finally, Snowflake. This is an earnings trade. Got lucky there as well. So I'm gonna bring up the chart here. I think it's 5 days is enough on this one because basically I entered this trade on Thursday right before earnings. So I entered the trade around here when Snowflake was trading at around $2.50. I sold a put spread at $2.30, $2.25, collected $1. So with this week expiry, so March 5th expiry. So actually, sorry, it was March 3rd. So I entered the trade around here when the stock, actually I had an order in and then the stock dropped to $2.39 on Wednesday before earnings. So I was able to, so my order got filled for $1. And then the next day, Snowflake was all over the place. But at some point, I had an order in before the open. I didn't make the same mistake as Zoom. I think I had an order for 50 cents. and it got filled for 43 cents. So that's good. Gave me a net profit of $44. So not bad for a quick earnings trade. And good thing I did, because actually Snowflake ended up closing at 239 on Friday. So this would have expired worthless. I could have made the full $1 profit, but I would have had to go through this stress over here, Snowflake being at 219 on Friday. So I'm glad I closed it as well. But that was the crazy week we went through. Lots of ups and downs, and who knows if it ended or not. So although I had a pretty good week in terms of closed profits and having a good start to March, first week of March, 1348, but now I'm stuck with a bunch of trades that are pretty much breached. I mean, I've got Unity put spread here at a 105 strike, and Unity is trading at 93. So this one's completely breached. So this one expires March 19. It's not looking good. My max loss on this would be $400 on this if I do nothing, but I'm going to try to manage it. I've got a higher covered call and March 19 expiry. So my strike is 10, but my initial cost is 876. I mean, this is breach, but it's not a big deal. I could probably sell another call. Yeah, so it's below my cost of 829. So this one's not doing good either. Got a Palantir naked put at a 25 strike. So this was an earnings trade that I rolled, which I didn't have to, but I ended up rolling. And yeah, so it's below my strike, but not by much. I've got APXT that I ended up rolling on Friday. So I ended up rolling all the way to, it was a March expiry. I rolled it to April 16, and I collected an extra credit of 46 cents to roll it. So my total credit right now is $2.61. But my strike is 15, and let's see where APXT is trading at. So APXT is trading at $12, so I'm $3 in the money. So not good. I've got, oh, this one's terrible. So I've got Root Insurance here. I ended up rolling it to April 16 as well. Collected a bit of credit, I believe, or I think I rolled it for break even. So total credit right now is $2.88. My strike is 17.5, but let's see where Root is trading at. It's trading at $13. So I'm about $4.50 in the money. So that's not good either. Got Peloton at a 120 strike that I ended up rolling as well from March to April. Collected an additional credit of $2.79. So I've got a total credit of $5.79. April 16 expiry, but my strike is 120. That's the problem here. Look where Peloton's trading at. It's trading at 105. Now the sad part is, look at March 1st. March 1st, it was above 120. March 2nd was at 126. And all of a sudden it's at 105. That's what really annoys me. Even it went as low as 94. At some point I was 25 points in the money. So I don't know. This is really annoying me. And what's even annoying me even more is the buying power required to hold this trade. So when I initially placed this trade, I think Peloton was trading at around 145, and I sold the 120 strike. So here's a disadvantage to naked puts, is the buying power required to place the trade increases on you. So when I started this trade, it only required 1850 maintenance excess to place this trade. But now that Peloton is at 105, look at the capital requirement for this trade, 4650. So now it's using $4,650 of maintenance excess just to hold on to this trade. And hopefully it comes back up, but if it doesn't, it gets ugly. And then I've got a naked put on Wish here at a 20 strike. So let's look where Wish is trading at. Wish is trading at 17.77. So I'm down as well on this one. I'm down about $2.20, but I have an April 16 expiry. And let's see. Yeah, I mean, March 1st was trading above 20. So hopefully if the market recovers, I should be safe. But if the market continues this way, it's gonna be ugly. Then I've got a snow put spread. So initially I had a 250, 245 put spread on Snowflake for March 5th. But then when Snowflake wasn't doing so well on Thursday or Wednesday, I decided to roll it before earnings because I didn't want to get that earnings reaction while I don't have a decent put spread. So I rolled it before earnings and I opened a new one for earnings, which I ended up closing. So this one was the new put spread that I opened for earnings, ended up closing with for a profit. But this one is the one that I think I had opened 2 weeks ago, or February 10, there you go. And so I'm just trying to save it. So right now my strike is 240, 235, and I still have that $1 that I collected in credit. And I think it expires April 16. Yeah, I've got April 16 expiry. So 240, and we see here at Snowflake is at 239. So I'm pretty much breached on everything. Some a lot, some just by a little bit. Now, Virgin Galactic here, Space, SPCE. This is a covered call that I opened August 3rd. I actually had the chance to close it this week for $22.60, but I got greedy. I wanted to close it for more. But if I had closed it for $22.60, let's see what would be the total profit. If I had closed it for $22.60, so it would have given me a $727 profit closed this week. And actually, let's see, for the total for the week would have been $2,076 if I had closed it, but I didn't. And now look what happened to Virgin Galactic, SPCE. It was trading almost in the 50s at some point. So yeah, 59, and look at this drop. It dropped all the way down to 27, and even on Friday I think it reached 23, 24, 23. So my strike is 23. So when Virgin Galactic was trading in the 40s, I could have closed my covered call for 22.6 about. So not my strike completely. So my strike was 23. So that basically means I can close the trade for 23 on expiry. But because I'm way before expiry and the stock's at 40, I can probably close it for something close, because my call option that I sold is losing extrinsic value. But now that the stock came back down, now I can't close it for 22.6 anymore. So now I'm in the trade, but at least I can roll it. Come April, if it's still trading at around 23, I can roll it for more credit. If it comes back up, if it goes to 40 again, then I can close the trade for early, and yeah, that's it, and confirm the profit. And then I've got this other naked put on Peloton at a 105 strike when Peloton dropped from 140 to 120. I thought it would be a good entry to enter again at a 105 strike, but little did I know 105 was also breached this week completely. But I've got a 105 put that I collected $3.60 for April 16 expiry. We saw that Peloton is trading at exactly 105 right now, but it was breached this week. I mean, it was trading at 95. So this one could be in trouble as well. And this one as well, if market price is 120, my strike is 105. This one's taking about 3,000 of capital. So I've got $8,000 of capital being used just for Peloton. I don't think it's worth it, but yeah, that's the problem that I have right now with Peloton. I've got Curiosity Stream. I've got a naked put at 17.5 that I had to roll to April. Didn't collect an extra credit, but I had to roll to April, or I think this wasn't a roll. I think it was the initial trade. But let's see where it's trading at right now. So my strike is 17.5. It's trading at 14.6. So that's not good either. Yeah, another one that's breached. I've got a HIMS covered call at a 15 strike. I think I entered for $13 about. Let's see where it's trading at. It's trading at 13, so almost at my cost. So not good either. Got XPeng here, covered call at 30. Entry price $27.50. This one's not good at all. I think it's below 25. Oh, it's at 28. Okay, not bad. But I think at some point it was doing pretty bad. Yeah, it was at 25.27 at some point. I've got Lemonade put spread at a 90 strike. Let's see where Lemonade is trading at right now. It's trading at 92. So just enough to stress me out. I've got AI here, 75.70 put spread. Actually, this one's interesting. It dropped 10% on Friday and back up 10% the same day. So it had a low of 77. So it didn't breach, but it came pretty close. And then it went back up to 97 and closed at around 95. And my put spread 75.70. I'm not sure. I don't know if I could have closed it for a profit. I didn't even notice. I didn't even think of considering it. But yeah, I don't think so. Then Lightspeed, I thought it was a good entry. 55 strike, collected $2.50. Lightspeed was trading at $51 at some point. So it really got destroyed this Friday or this week. Right now it's trading at 58. So I'm still, it's somewhat safe, but I mean, it dropped a lot. I entered when the stock was trading at 65. So yeah, that was a bad. I was 10 points away and all of a sudden I'm completely breached the next day. It was very funny this week. Very funny. So I've got that Fubo naked put that I told you about. I've got Tattooed Chef at a covered call at 17.5. Let's see where it's trading at right now. It's trading at 19. So yeah, so this one's safe. Okay, I've got open covered call. I talked about this already. Open, I think, is trading at 22. Yeah, so this one's not doing good. So this one's breached as well. I've got a curiosity stream here, covered call at a 15 strike. And I think we said it was trading at around 14. Yeah, 14.6. So as you can see, a lot of them are breached. A lot of them are very close. I've got Luminar here that's completely breached. I've got RMO that's breached as well. Let's see by how much. So I've got a 15 strike. The stock's at $9.68. That's terrible. But gladly, good thing it's just a $15 stock. I mean, it's not taking that much buying power off me. So if the stock's trading at 10 and my strike is 15, it's using, well, actually, I think it's a 50% margin requirement stock. So it's using about $1,000 of capital right now. So it's not so bad. Not like Peloton that's using $8,000. Then I've got a naked put on HIMS. I think we just saw HIMS. I think it's trading at 13 or 14. Yeah, 13.36, and my strike is 17.5. So completely breach on this one. But my expiry is May 21st. I had to go to May 21st. I rolled it for an extra $1.12 credit. So I collected an extra $1.12 while I'm waiting for the stock to come back up, if it does come back up. But I mean, it is a growth stock, so it should come back up, but who knows. Then I've got a Sumo naked put here that isn't doing well. I've got a 30 strike. I ended up rolling it. Total credit is $2.60 for May 21st. Let's see where Sumo's trading at. I hope it's not that far. All right, 27 I can live with. And it had a low of 24, so that's not good. So if Sumo expires, what's my expiry here? May 21st. If it expires May 21st at 27.6, I would have to buy this option back for $2.40. So it's actually not bad. I could break even if it stays at this price, but my goal is to make a profit, so I do want it to be above 30 by May 21st, or even sooner, so I can close the trade earlier. Then I've got SNPR here, 15 strike, total credit $3.02. Had to go all the way to July to be able to roll for a credit. So that's one of the problems with naked puts, is if you're completely breached, you can still roll for a credit, but not enough credit sometimes. So SNPR, so 11.28, so $3.70 in the money on this one. So almost the value of premiums I've collected, but I have to wait till July, so that's the problem. And finally, a Wish covered call, 22.5 strike, so that's really not good, but my entry is 15, and I went all the way to October 15. Expiry, so Wish, I believe, is at 17, I think. Yeah, 17. Good memory. All right, so it went as low as 15 today, Friday, but back up to 17. And this one here, I was just trying to experiment something. If I wanted to sell a 1 year covered call just to see if it's a good idea in terms of I'm collecting cash up front. 1 year's worth represents about maybe 30% or 40% of the investment that I'm making. So if I see it as replacing dividend stocks, I'm getting my dividend up front. I'm getting way more than 4% or 5%. And I can use that dividend to buy something else right away. But there is a risk, of course, that the underlying drops, as you could see here, goes from 22.5 to 17 or even 15. But if I'm holding it for a year, then I don't really care. As long as I trust that over time this stock is going to come back up, then I don't care. I already got my premium up front. I can spend it, and I just wait for expiry to get my capital back. So we'll see if that works or not, if it's sustainable. I think the choice of underlyings is important in this case. But the problem is when you follow premiums, you end up following risky stocks that tend to move a lot, that are very volatile. All right, so these were my trades for the week. So remember, if you want to join the trade alerts group on WhatsApp, just email me below. And like always, if you're going to open an account with Questrade to trade on the stock market, use my referral link below to get $50 in free trades. Also, check out the other referral links below. If you enjoyed this video, click the like button, share with a friend, and subscribe to the channel. Thanks for watching.